Off to our main event, our first speaker is the former chief economist of Citibank for Thailand and the Philippines. With over 3 decades of experience as an economist, he has witnessed Philippine economic history as it was written. Ladies and gentlemen, it is with great pleasure that I introduce to you Mr. June Trinidad.
Thank you, Ed. Morning, Dino, Marvin, and to the valued clients of Call Financial, magandang umaga po. Let me start this morning by giving you the very basic idea of why I think it's good to be sanguine about financial markets over the medium to long term. And this is not just culled from recent experience, but as Ed has disclosed, since I've been working in the market, in this economy and outside this economy for the longest of time, you can just imagine how old I am, huh? And the years of experience, a little bit of set of victories, making the good calls, and some disappointments that I've gone through. One thing is very clear as far as I'm concerned, and this is my view, not Citibank, the institution I was formerly connected with, that markets that are vibrant, that offers good returns to investors, the basic support, the basic catalyst, again, in my view, is not something short-term. Interest rate cuts, balance sheet expansion of the central banks, tumutulong po yan. But the basic catalyst would be policy reforms. Reforms that unlock investment opportunities from infra, telecoms, you name it, real estate. And from these investment opportunities come support for the financial markets that deliver value. In short, your favorite word and mine, while you are invested in call, wealth creation. Obviously, the opposite is the reverse. From wealth destruction comes populist policies, or stem from populist policies over time that cannot be sustained. And we've seen as well emerging markets that are happening right now. You tune into CNN, wag muna ngayon, ha? Maybe later on, and you'll see, check out the developments in Venezuela, where populist policies are now in conflict with the middle class aspirations for a better life. So, as far as policy reforms are concerned, I guess you might say, well, okay, I agree with that. Bottom line is, how does that impact you and me? Baka mamaya, it is only for the Forbes top 1,000, or the Filipinos that are there, the multi-billionaires. No, no, no. It impacts both the rich and the poor, especially if these policy reforms are crafted, designed well. And we don't have to look far, folks, for me to convince you that any government embarking on tough policy reforms will bring about long-term, lasting, enduring implications that will have or can provide favorable value to the financial markets that we are familiar with, the devil we know. Yeah, and from the 1986, and I guess my son who's with me today, I don't know where he's seated, baka umalis na, wasn't born yet, but from that time that former President Cory Aquino liberalized the country, so to speak, restored democratic institutions, and allowed free markets to thrive. Wala na pong crony capitalism back then. What has transpired? A lot of the next set of political leaderships took from there to undertake a lot of economic reforms, foremost of which was during the Ramos time. I'm sure none of us were born yesterday, huh? A couple of millennials here, I see, who may not be so familiar with what happened back then. But let me tell you some experience. We can talk endlessly about this. One experience that up to now reverberates in my mind would be the telecoms industry. How many of you do not have mobile phones? Raise your hands. Oh, Miss Arono, you probably are an extraterrestrial, huh? Out of this world, huh? Yeah? But what happened back then? What prompted Ramos? Was he a visionary? Of course he was. But why did he choose that? Well, it's not the most important reform, but it certainly provided, unleash a lot of opportunities, at the same time improve efficiencies that a lot of industries that are not telecoms related are enjoying right now. Foremost of which is the BPOs. How many are from the BPOs here? Come on, you can be truthful with me. I'm not from the BIR. I'm not going to run after you, right? Huh? But the point I'm trying to say is back then, there was only one monopoly, known as PLDT, facing excess demand and can only supply efficient services of so much. Demand, supply. There was that gap. And who will provide that gap? No one. And we were all suffering back then. Remember, party lines? Kung makakakuha ka ng telepono, may party line ka pa. And the millennials would never go through that experience again, thank God. The inefficiencies it brought about. You can't do teleconference, you can't finalize run after deals over the phone, which is so easy now, which we take for granted now. Assuming makakausap mo yung nasa kabilang linya, because it was analog and not digitalized back then. So he discussed this with the monopoly and said, let's open it up to competition. And what happened? From that opening up the regulation, what we saw was hundreds of telecom companies, pretenders perhaps, coming into the market. Islacom, Glo, then Deutsche Telecoms, companies that you've never heard of, attempting to supply that gap between demand, or at least meet that gap between demand and supply. And what we saw over time was so much competition that brought the industry to two telecom providers. Not perfect, and we have our complaints that we can say up to now, right? But definitely I can tell you, the efficiencies are much better than what we saw back when we started in the mid-90s. And what's more important is that it brought in gazillions of pesos to invest in digitalizing the telecoms infrastructure, which the BPOs are enjoying right now. Second, investments in technical innovation, foremost of which is the smartphones, tablets that you probably have right now and ready to click on at an instant's notice pag may Wi-Fi. Because I want to get updated. I want to see my email, my Facebook, what is my daughter doing? Itong anak kong lalaki, gumising na ba? The efficiencies that it brings about, all at relatively affordable rates. So are we close to being perfect? No, as I've said. Mbps right now sa Wi-Fi, without mentioning any of these providers, affordable is 5 Mbps, di ba? Tama? You go to other countries, Thailand, nasa 15, 20 Mbps. Singapore, 45 Mbps, according to one research, which tells you that what? The video, data, all sorts of transmissions are quicker. They're at affordable rates. So there's still some work in progress that we're going through right now. But one thing I can tell you, global standards are being brought into this country for that particular industries and others, that we would never have experienced, enjoyed, had policy reforms not been instituted years ago. Okay? So, crucial to any emerging markets development and eventually the financial market innovations and value for any emerging market, especially in this region, would be the reforms that those countries would embark on. And we can talk endlessly in other countries, in other, the experience of others. But one thing I can tell you is this. Once reform initiatives are in place, and it snowballs, creates second-round effects, brings about synergies and efficiencies, prices, including inflation, starts to ease off. More competition in the market, good and bad, but consumers like you have more choices to make. Overall, welfare gains start to improve. Then you might say, ay, ikaw naman, Jun, napaka-textbookish mo naman. Narinig ko na nung nasa college ako, long time ago. What does it mean for me and my exposure to call financial? Bottom line, folks, which is what a lot of people, talking heads, are missing when they argue about reforms, is that over time, hindi bukas, hindi dun sa horizon ni April na 12 months, over time, all these reforms, now and what has been done by Ramos, former President Estrada, meron din doon, former President Arroyo, former President Aquino, and hopefully under Duterte. When you put them all together, it creates a critical mass of reforms. Critical mass, the minimum number that can support economic growth over time. Kaya hindi ako kabado. Of course, all these downsides and upsides is an opportunity for you guys, for us, to reallocate portfolio in the near term, do this, do that. I don't want to elaborate on that. You can talk to this specialist. But the core support from the economic side is there. And you have to be convinced, just as I am convinced. Because we're already seeing the effects. Yeah? And so, bottom line, folks, for you and me, rather than read the news, this is an overtime phenomenon. Will per capita incomes improve? Then you must say, ito na naman tayo, mga economist jargon na naman. What is per capita income? It's nothing but a GDP measure over population. Okay, so what does that have an impact on me? How can I feel it? If your average take-home pay starts to increase. And not because of inflation. More jobs, more efficiency. Your company that you're working for continues to expand. Like call, how many when you started, Dino? Less than 1,000 investors now? 1,001 na ba? More than that, tripled, quadrupled, Oh, 200,000 there. Thank you for correcting me, sir. How about a big hand for that, All because of you guys, All because of you guys, And you have to see that and believe in it. And when per capita incomes rise, what happens? And I'll show you later on a very simple chart, but very convincing from my perspective. You can save more. Lifestyles change. Remember that, Lifestyle changes. Dati nun, pamotor-motor ka. Ngayon, pakotse-kotse ka na lang, no? One form of lifestyle change or preference. These and more. Which is why the last set of slides would be on Duterte and what he plans to do with the tax reform. Well discussed, well thought out, but hopefully I can make clear what the arguments and benefits are and the final impact on how we perceive per capita incomes to be. With that introduction, dami ko na pong nasabi, hindi ko pa ginagamit yung slides ko. Let me start with my first set of slides, which is to give us an indication of where we are right now. Nasaan na ba tayo ngayon? Ha? Okay. Potential growth, per capita income. Key measures, yun lang ang titingnan natin muna. Especially for you guys who are busy doing your own stuff, doing your own thing. The potential growth, 6.5%, that easily, pikit mata, kaya ng ekonomiya yan. And per capita income is at $3,000 per capita. When before, back in 2001, it was, early part of this day, it was about less than $1,000 per capita. Should we be happy about this? Yes. It's been progress. But, as I was telling Dean when we were arguing about the presentations that I'm going to make, 3,000, what's there to crow about? Ano pagmamalaki mo yan, pagyayabang mo? Ha? Because if you go to compare that with Thailand, it's double the per capita income. And it's not because of low population. Ha? Not just because of that. In Indonesia, which is a bigger population base than ours, yeah, 200 million or so, hindi ko sinasabi dapat umabot tayo ng ganun. 200 million or so, the most populous secular Muslim state in the world, what's the per capita income? It's past $3,000 per capita now. So population contributes but has very little to do with it. And all because Indonesia continues to open up and reform as well and attract investment opportunities, meaning the spark to private investments continues to be there. But 3,000 is nothing to sneer at. Huh? And then when we look at the diversified sources of growth, I'm jinxing this. No, there you go. From remittances to BPOs to infra spending, which is not bad. Yeah? Low interest rates, not bad. When you put them all together, that's supporting the 6.5. But one statistic stands out. Look at this, investment share to GDP. Yung investments po niyan, hindi pa yung ini-invest nyo sa stock market o pagbili nyo ng mutual, bukod po yan. These are investments that create jobs. And what are these? When you build new factories, greenfield plants. Hindi yung pagbili mo ng ownership o paglipat ng ownership from one stockholder to the other. Hindi po yan. These are real investment activities. So I've said that create jobs and income. Yeah? Infrastructure is one. You build the bridge, etc. New capacity, new planes being bought to replace the old ones. When you put them all together, it has now reached 28% of GDP. What does that mean? Well, that means that GDP investments are contributing a lot to creation of income and hopefully wealth. Oh, what's so important about that? One statistic worth comparing. You've asked me what the share of China's investments to GDP is. Over the past so many years, that share has been 30% or more. So if you are using China as the standard for the region, we are closing in on that ideal contribution in which it's not all consumption. Consumption grows. Sabi ibang ano yan, tagal na yan eh. Remittances, gas-gas na po yan. Kung kukwentuhan nyo lang ako ng ganyan, hihikab lang ako. Aantukin lang ako this. We know that. Tell me something new that can uplift my investment spirits, and that's it. Because what we're seeing is that all this economic activity, creating traffic, admittedly, over time is putting in new capacity that can bring about, unlock efficiencies that will be good for growth. Not just today, not just 6 months from now, not just 1 year, but over the medium to long term. And then, jobless rate, look at that. When the share of investments to GDP is rising, look at jobless rate, easing off from the historical highs. And then when you have new capacities in place, including a central bank and a treasury, a finance, that's maintaining some degrees of autonomy from political influence, able to carry out prudential fiscal monetary management policies, it helps the combination of investments, new capacities, and prudential fiscal management is helping bring down inflation. Of course, nakatulong yung bagsak yung presyo ng langis. Yeah, but you're still running at 3 to 4%, which is much lower than what we've seen historically. And so what does it mean for you and me? Well, bababa interest rates. Isn't that helpful? So now for your businesses, the least of your concerns would be paying the cost of money. Ang concern mo lang dyan is, yung negosyo ko ba, is it going to grow at a pace that can address some of these financial limitations or concerns? So, this, in my view, is a summary, a picturesque summary of key statistics of what we are in right now. Which is why I'm telling you that if you see downsides as far as the market is concerned, certainly is a very good opportunity to get back in. And I'm not just saying to the equity market, because that's a hard sell. Even the bond markets, money market instruments, certainly it's a good time to consider getting a little bit more exposure on the back of the strong macro backdrop. And it's also an answer to some of your queries. What if Duterte doesn't commit to these reforms? I don't believe that. Well, the answer is that we will be coasting along 6.5% growth, 3,000 per capita, and improving gradually. Ang tanong po dyan is this, which I pose to you. Masaya ka na ba sa $3,000 per capita? Masaya ka na ba sa tinatanggap mo ngayon? Are you contented with the cash flows that your business are generating right now? Of course, you came from nothing, you might say. If you ask me, given my limited lifetime that I'm facing right now and even before, I won't be contented. Because one of the things that policy reforms could do is to address the economic inefficiencies, the economic weaknesses. Yeah? As I was explaining on the telecom side. Yeah? But the bottom line is, it helps maximize the potential of the economy and markets. And that should be the battle cry of any government. Maximize the potential of any economy, market, industry. And in so doing, you introduce global standards, and you can only do that by policy reforms. Which is why when I discuss about 6.5 and people come to me, are you happy with 6.5? I said, yeah, 6.5 is nice. You're beating Thailand, which is running at 3 to 4. Malaysia at the same pace. US can barely make 2%. Yeah? So are you happy with 6.5? I said, no. Because unlike those countries, as I've said earlier, their per capitas are much higher. People can spend more, can save more. There's that flexibility that those people have, which we do not have compared to them. Which is why the need for policy reforms is crucial. Whether it's Duterte, kahit na sino pa maging presidente sa susunod, si Bimbi, si Joshua, I don't know. Take your pick. Baka si Marvin, we don't know. The policy reforms are crucial to accelerate the pace of improvements in per capita. So what's 6.5%? Maintaining that? The description there is you're playing catch up. Catch up. Naghahabol ka lang. Sino hinahabol mo? Yung mga nauunang ekonomiya siya, mas malalaki. So, happy kayo sa naghahabol tayo? Which is what the government policymakers realize that we should do. So in that regard, perhaps the next set of slides would provide us a basis for what we need to do. And obviously, the reason is infrastructure deficiency and the need to fund that. But before we go into that, look at the slides. Huh? Baby, we've gone a long way, so they say. Look at IT, BPO revenues, and remittances. When you sum that up towards the more recent number, that's $40 billion, roughly, $40 billion of inflows coming in and converted to what? Ringgit? Rupiah? They're converted to what? Pesos. For daily support, daily expenditures, creating liquidity, at the same time supporting consumption. 40 billion annually. Ang laki niyan at hindi po mawawala yan even with artificial intelligence in the very near term. And here's the FDI. Last year, it's about $5-6 billion. Huh? Should we be happy with 5 to 6 billion? It's a record high, but I can tell you folks, in Thailand, isang quarter lang yan. Which is 1 year for us. In Vietnam, probably 1 sem. At sa atin, isang taon. Isang taon, talagang isang taon. In their case, it's been a recurring set of numbers. So there's still more work to be done. The big question now is, okay, we agree that growth has to be high, 6.5 or maybe even more with policy reforms. Can it be sustained? What of this talk about current account deficits, fiscal deficits? Ano po yun? And how will that affect growth and the markets? Well, whenever an economy is growing, one thing is clear, it will have to import something. Even China, with all its massive infrastructure and production capacity, that is a manufacturing center of the world, cannot produce all its consumption requirements. Bibili pa rin ng isda yan sa atin. Same with Japan. Singapore doesn't plant rice. Huh? Many of you, but when you order rice in Singapore, iba-ibang variety. Yeah? So the point I'm trying to say is that no economy can be a single producer of everything. At some point in time, they will have to import. Now, the big question there is that, are we importing more than what we're selling or exports? What are we selling? Anything from coconut oil to what? Tech, copper. Nakakabenta ba tayo ng copper? Well, mining controversy is over, right? So we can sell more now, right? Gold, ano pa? Bananas, pineapples, ignition wiring sets. So, very diversified set of products coming from the Philippines. Big question there is that when you sum this up, just like when you do your balance sheet assessment or P&L, ano lumalabas? The summary transactions between Philippines and the rest of the world, what we buy and sell from them, including remittances, including BPOs. Once you sum that up, at ang lumalabas po is positive, your current account is in surplus. And if you have years of surpluses, which is good, you are building up the dollars in the system, your dollar reserves, which you can use for importing. But what if it's the other way around? You are importing more, langis, aeroplano, ano pa? Bala. Raw materials, your gadgets, your tablets, your smartphones, you name it. If what you're importing from the rest of the world is much more than what you're selling to them, then you have a loss, what we refer to as a deficit, a current account deficit. Now, what if it's a deficit? What is the price to pay? Will it affect growth and the expansion of the financial markets? It depends, basically. Safe answer. It depends. Because if it's just less than 1% of GDP, maliit po yan, no matter how big it is in dollar terms. If the ratio is just 1% of GDP, it's small. And the peso will definitely depreciate, but it's not going to go to 52 or 53 in the very near term. It's not going to go to 54, 55 because you still have a huge dollar reserves to provide liquidity in the market if it needs so. Right now, mag-appreciate, mag-depreciate, but if the range of depreciation, in my view, is in the 50 to 51 level, that's not going to compel the Banco Central to raise interest rates and cause the markets to collapse. It's not going to lead to a lot of inflation, because much of the inflation that we're seeing right now is coming from very upbeat demand. So, in short, easy lang tayo. Let them get excited. But the financial repercussions are minimal. Now, then you might say, okay, kung less than 1% deficit is not scary. What's scary to you? What keeps you awake at night as far as the current account is concerned? Yung numero pong to. Yan, sana, nawala. And what's so special about 4 to 5%? Yan ba na pag-aralan mo? Yan ba yung natutunan? No. Because when the Philippine economy incurred a 4 to 5% deficit on the current account to GDP, it started the bust cycle. Government had to cut spending, raise interest rates, and that's a recipe for a recession. And right now, we are enjoying the best of both worlds. There's growth, investments, imports coming in. When you sum it up, the balances is not a threat. The balances, are not a threat to growth, both of the economy and the financial markets, in my view. And then we have the fiscal debt. Ano naman to? Deficit na naman. Well, it's really the target of government, 3% of GDP. Is that good, bad? We need to spend, as you all know, plug infrastructure leakages and gaps, poverty alleviation, financial inclusion. Nice buzzwords, but what does it mean? Kailangan gumastos. Rebuilding of Marawi, kailangan gumastos. And that is a priority that hopefully the tax reform package, which I'm going to discuss in a while, is certainly going to provide support. So then from that perspective, I'm not too worried. Now, this is just a description once again of the current account. Look at this. Current account. Summary transactions of the Philippines with the rest of the world, including remittances and BPOs. During the years 2008, 2007, 2009, you were in huge surpluses. Yeah? Because you're in the positive region. Now, where are we? Positive pa ba to? Naka-parenthesis. Parenthesis region, which is negative. Hindi yata naka-convert. But that is a negative region now. Yeah? Not as huge compared to what we saw in the past, but look at the correlation with the peso. When we were enjoying surpluses, peso started to appreciate, but now, with a depleted surplus down to a deficit, nagwi-weaken ang peso. Will it go back to this particular range of the peso? I doubt it. I doubt it very much because you can already see that there was hardly any surplus back then. Deficit, if you believe the BSP figures now, but look at how managed the peso depreciation is. Meaning that BSP, outgoing Governor Tetanco, incoming Governor Nestor Espinilla is suggesting that is the least of your concerns. That we are managing it well, we have reserves, we will allow the price to improve, but at a level corresponding to demand and supply. Some would be saying, ito ba yung result ng Operation Tokhang, please? That's the least. Hindi naman po bumibili ng dolyaris yung mga drug lords, you know? I mean, I don't know. Hardly. It's based on fundamental demand and supply. And right now, there's a lot more demand against steady supply. And it's just right that prices have to adjust correspondingly. So the message is, huwag na po tayong magpanic. Don't speculate. I wouldn't want you to speculate, but if you need to buy dollars for funding your financial, operational obligations, do so. All right. Having built up all that case, the next question is, so what are the tax reforms? What are these and how will this impact us? Basically, the first set, and there are a couple more, huh? But the first set of reforms now in Congress is to cut income tax rates and hike excise taxes on diesel and gasoline, autos, ano pa, sugary products. At the same time, remove exemptions that can be removed, that are not that essential. Once you cut the income tax, especially of daily wage earners and the lower members of the withholding tax community, government stands to lose 140 billion pesos. That's roughly, let's say, close to less than 1% of GDP. What government is trying to do is give back some of the taxes to the lower income groups. And I'm not just referring to daily wage earners, pero even those that are starting to work in the industry, like my son, that hopefully he will provide me with some of those tax rebates. Huh? Your children who are just joining the labor force right now, new entrants, they will be the key beneficiaries, in my view, of that 140 billion tax rebate, so to speak, that tax cut. Now, the big question is, what will they do with that? Huh? Anong gagawin dun sa 140 billion? Invest everything in call financials, perhaps, huh? Yeah? Good idea, right? But the way I see it, if you apportion 80-20, much of that incremental, marginal income tax cut will be spent. Spent on what? Basic foodstuffs, perhaps? Yeah? But the sense I'm getting is that if these are the millennials, the young ones, you probably will see a lot more support for discretionary spending. What's discretionary spending? Anything above, beyond the basics, food, water, you know, a little bit of education, huh? Kuryente, anything above that, I would treat as discretionary spending. Meaning something that you can postpone, that your families would not die of or get, if you deprive them of discretionary spending, pagpunta sa mall. Well, bagay, nakakamatay yun sa iba, no? Pag hindi nakakapunta sa mall, ha? Nakakapanood ng sine. Yeah? Ang dami namang free movies na sa internet ngayon. But the point there is the discretionary spending component, which is about 60% of consumption, some of that will stand to benefit. And when I was in Citibank, I was already preaching this gospel to my clients. Are you prepared? Kaya nyo ba yan once the demand comes your way? And some of them are already starting to make their moves. If you look at the advertisements and what they're doing as far as providing better price points and benefits for their markets. Yeah? And not just that, but part of discretionary spending is durable goods demand. Motorsiklo, maybe bisikleta, double chromoly. I'm not sure that's the basic material now. A little bit more expensive because they can afford it now with that tax lift. Bottom line is that there's going to be a big consumption lift coming from that income tax cut over the next 3 to 5 years. And not just from eating rice or iced teas. Huge income consumption lift that some of the listed companies are likely to feel. And as an indication, look at this chart. Even I was surprised. One of the discretionary income components is something that everyone is so familiar with. The budget for meals taken outside. Meals spent outside the homes. Ano yun? Punta sa Mang Inasal, Kuya J, whatever. So when you take your families, you go on dates, those are meals, and they have a nice meal. Those are meals taken outside. And look at what the statistics show. This is the percentage share of meals taken outside, in this chart that I'm pointing to right now, for Philippines and Metro Manila. Look at the sizable growth from 2003 to 2015. Wala pang tax reform dyan, Wala pa. Wala pang tax reform. Look at that. And this is the fastest growing segment of the household budget allocation for this country. And then I said to myself, talk to Marvin and Ed, why don't we superimpose it with our GDP per capita? Right-hand side, di ba yun? 3,000, di ba? Sabi, binobola ko kayo, But look at how closely the correlation is. Orange line, green line, share of meals taken outside in Metro Manila. Blue line are meals taken outside for the whole country. Look how closely the correlation is. So enough said. Which is why I'm saying, brace yourselves for that favorable consumer response, perhaps second half of 2018, because the tax cuts could precede the excise hikes, and therefore the tax gain will be felt before the tax pain. And remember, no pain, no gain, but in this case, government may want to sequence it in a way that would be politically palatable to everyone. And then, what of the excise hikes? Will this cause tremendous pain? Perhaps, especially for car owners like most of us. And that's 2 million families out of what, 15, 20 million families all over the archipelago? Yeah? But what's the key point? When you are taxing the economy through the excise route, much higher than the tax rebate, di ba? Kaya nga sabi ko rito, on a net basis, government stands to earn more than give away. Earn more than what it gave out. And some already accusing that this reform, as a result, is anti-poor. Wait. Before you jump into that conclusion, look at it this way. You need new money, new cash flows compared to what you're collecting. Kung kinokolekta mo, ganyan, But you need new cash flows. Why? Very obvious answer. He has pledged the golden age of infrastructure. More infra spending, and nararamdaman na natin sa traffic. And hopefully not just in Metro Manila, but out there in the regions where the source of poverty, a key source of poverty, income inequality, is because of the poor, the dearth in good infrastructure. And then you might say, oh, so what? Magtayo ka ng tulay doon. Ayayaman ba yung mga ethnic minorities doon? Ha? Magpalagay ka ng magandang airport doon. Bigla bang angat ang buhay ng mga poor income communities there? No. But the infrastructure, which is what we've seen in the past, putting the right set of infrastructure there can spark a lot of private economic activity that can soak up unemployed resources, the slack in those regions, and start what I referred to, what I mentioned to Dino, the virtuous cycle. You initiate it, catalyst, creates jobs, incomes, demand, new investments, paikot-ikot po yan. And that iterative process, not a perfect situation, some businesses may flop, some businesses may win, like what we saw in the telecoms, but the iterative process will bring about, in my view, very strong economic growth and support for, the way I see it, long-term growth, certainly strong potential of about 8 to 9% GDP growth compared to the 6.5%, and strong per capita incomes. The way I see it, easily $5,000 per capita from the current $3,000 over the medium to long term. So remember, to end, where we are, 6.5, $3,000 per capita, and the goal is to accelerate that process within the next 5-7 years to $5,000 to $6,000 per capita. But this time it will entail faster growth of more than 7%, close to 8, 9%, on the back of the fiscal reforms that will fund a lot of infrastructure. And as I've said, you guys should feel it. Not just because you're the value NAV of your stock, preferred stock portfolio is appreciating, but even from your average take-home pay, your businesses, it should start to improve. And the sense I'm getting is that there are countless examples in this economy of that virtuous cycle and what it has brought about, what it has spawned economically, and the good things, the good lasting things it has brought to the financial markets. I thank you so much for this opportunity. I think I've exceeded my time and look forward to your questions later on. Thank you.